Cash Management and Disbursements for Foreign Schools, featuring Case Manager Byron Scott.
Hello, and welcome to the Cash Management and Disbursements for Foreign Schools session. My name is Byron Scott, and I'm a case manager in the Multi-Regional and Foreign Schools Participation Division, and I'm delighted to be presenting this session to you today. In this session today, we're going to start by discussing the accounting requirements and responsibilities for schools participating in the Title IV programs. We will then discuss student disbursements and how the funds that your school disperses to students are connected to the funds that are available for you to draw in G5. We'll then wrap up with a brief discussion about direct loan reconciliation. In addition to accounting requirements, we'll also be discussing your school's role as a trustee of federal funds. Fiduciary is a word in the English language that you may not be familiar with. The regulations require that schools act as a fiduciary of Title IV funds. That means that they are subject to the highest standards of care and diligence in administering the Title IV programs and in accounting for the funds received. This requirement also applies to any third-party services your college uses. You and your servicer must act with the competency and integrity to qualify as a fiduciary. Another way to think about this is that acting as a fiduciary means that you must be as careful and responsible with Title IV funds as you would be in managing your own personal money. Schools must divide the functions of authorizing payments and dispersing or delivering funds to people or offices that are organizationally independent and not members of the same family. For this purpose, the regulations define who qualifies as a member of the same family. This requirement means that the same person or office should not award funds to students and then disperse the funds. Remember that dispersing funds means posting the funds to the student's account at the school. In the financial aid office, it's fine for you to have view-only access to G5, but you should not be able to draw funds yourself if you are responsible for awarding the funds. Generally, dispersing funds to students and drawing the funds from G5 is a function of the bursar's office or business office or whatever it might be called on your campus. A school must have an adequate system of checks and balances within its system of internal controls. A general definition of internal controls is they are the procedures your school has in place to make sure that funds are used for their intended purposes. And this would apply to all funds, not just Title IV federal funds. For example, if someone makes a donation to the engineering department, your system of internal controls ensures that those funds are not spent in the history department. A system of checks and balances within your system of internal controls also means that multiple people are involved with individual cash transactions. For Title IV, it specifically means that the person who awards funds can't disperse them. There should also be checks and balances within your business office to ensure that Title IV funds drawn are actually posted to the right student accounts. This slide means that you cannot use Title IV funds for anything other than disbursements to students. After the funds are dispersed to students and their internal accounts have been credited, your institution has earned those funds and they may be spent as needed. However, before the funds are posted to student accounts, they cannot be used for anything else. Your college cannot use the upcoming receipt of Title IV funds as collateral for any purpose, nor can the federal funds account be pledged as collateral or used to guarantee any kind of debt. Remember, too, that the direct loan funds your institution receives are specified by use by award year, but they are not student-specific. If you draw funds for a student who turns out not to be eligible for the funds, you can disperse the funds to another student as long as you do so within the timeframes necessary to avoid excess cash. This slide describes the accounting records your institution must maintain, and these are defined in Regulation 668.24. Schools must maintain on a current basis financial records that reflect all program transactions, general ledger control accounts and related subsidiary accounts that identify all program transactions and separate those transactions from all other transactions, program subsidiary ledgers, and credit balance ledgers. If your institution doesn't maintain a current direct loan ledger, completing reconciliation could be more difficult. The next slide is an example of what a direct loan ledger could look like. This ledger shows the receipt of funds from the Treasury on October 14th, the disbursement of those funds to students on October 15th within the required 3-day time frame, and the return of funds for a student who has withdrawn. For the refund, the funds were refunded from the student's ledger account to the federal account on November 10th, and then returned to the Treasury on November 13th, also within the required 3-day time frame. It is not required to maintain a direct loan ledger in this format. This is only an example. For this presentation, I have prepared the ledger in US dollars. Depending on how the systems are set up at your institution, you may have records in both US dollars as well as in your national currency. Now we're going to discuss student disbursements in detail, and we're starting with this topic because reporting actual disbursements to students creates your funding in G5. A Title IV disbursement is defined as the date that the institution credits a student's account at the school or pays the student directly with funds received from the department or institutional funds used in advance of receiving funds from the department. The actual disbursement is based only on the posting of funds to the student's account. It has nothing to do with when funds are drawn or requested from G5. This slide is an example of what a student's ledger could look like. Note that this ledger is in pounds and shows tuition charges as well as the disbursement of Title IV funds to the student's account. This student level record would normally be in your local currency. Because the funds were disbursed to the student's account on October 15th, that is the date of disbursement you must report to COD. The disbursement date reported to COD must be the actual date of disbursement to the student's account. You may report the disbursement as 7 days before the actual date of disbursement, but you must report no later than 15 days after crediting the student's account. Remember that interest begins to accrue on the date of the actual disbursement reported by your institution. These deadlines apply to reporting actual disbursements, that is, when the disbursement release indicator, or DRI, in COD is set to true. Now, let's say for some reason you reported the disbursement date to COD on October 14th, but something happened and the actual disbursement date turns out to be October 15th. You must update the COD disbursement date, and this is easy to do on the website or via your software system. Remember that a valid direct loan master promissory note for the academic year must be on file with COD prior to submission of actual disbursement records. A direct loan is considered booked when COD has accepted the origination record, master promissory note, and the first actual disbursement. A booked loan is a debt owed by the borrower. Booked loans are transmitted to a federal loan servicer for maintenance and collection. After booking, the servicer notifies the borrower of the disbursement, loan terms and conditions, and servicer contact information. Subsequent disbursements are assigned to the same servicer. The servicer will communicate with the borrower when it receives information for subsequent disbursements. This slide describes the required notices to students about their Title IV awards, commonly known as the award letter, and the required notifications to students about direct loan disbursements. Today, we're focusing on the requirement to notify a student or parent borrower of their right to cancel all or a portion of each and every loan disbursement. Each time you make a disbursement of loan funds, you must notify the borrower of her right to cancel all or a portion of the disbursement. If the borrower replies within the deadline and wants to cancel all or a portion of the disbursement, you must comply with their request, even if you've already drawn the funds, and even if due to fluctuating exchange rates, there is a cost to you. You must return the US dollar amount requested by the student. This is another reason that reporting the accurate disbursement date is important. The student's options are triggered by the actual disbursement date. The handbook describes affirmative confirmation, which is one way that the notifications are divided, which in a nutshell means the student has said, in writing, yes, I want this much loan money. The handbook discusses these requirements and the differences between when affirmative confirmation is and is not received in more detail. Because a direct loan is debt for the student or parent, we always want them to have the opportunity to say no, I don't want the loan, or that I don't need this much of a loan. The only real difference in the notification requirements is based on the type of confirmation, and that has to do with the timing of the notification, not the content of the notice. If you want to do any of the actions listed on this slide, you must obtain the borrower's authorization prior to taking any of the actions. These include the use of a stored value card or similar instrument for issuing Title IV credit balances, using Title IV funds to pay for allowable charges other than tuition fees and room and board if the student contracts with the school for room and board. This includes books and supplies, holding Title IV credit balances, dispersing Title IV funds by electronic funds transfer, EFT, to a bank account designated by the student. These requirements are described in Regulation 668.165B as in boy. You may only credit a student's account for allowable charges. What are allowable charges? They are current charges for tuition, fees, and room and board if contracted with the school, current charges for educational activities if students or the parent provides written authorization, and that includes books, supplies, and other necessary equipment. Allowable charges are described in the handbook, and we won't be discussing what they are in this session. Current charges mean charges for this year, and for direct loan purposes, the year is the loan period. So if it's not the current year, it could be the prior year. Title IV funds can be used to pay minor prior year charges, only up to $200 US. This is the only exception to the requirement to use this year's funds to pay this year's charges. And for direct loan recipients, the year is the loan period. And the student or parent cannot provide authorization to pay for more than $200 in prior year charges. So even if they ask, you can't do it. So let's talk about what happens if Title IV funds dispersed to students exceed the allowable charges. This is known as a Title IV credit balance, and problems with this is a relatively common audit finding for foreign schools. A Title IV credit balance is a credit balance where the Title IV funds dispersed exceed institutional charges. If a credit balance exists because a student got a large assistantship grant or some other kind of non-Title IV funding, there may not be a Title IV credit balance, even if there is a credit balance on the student's ledger account. In the example on this slide, the student's overall credit balance is $2,701 because that's the amount that credits exceed charges. However, the Title IV credit balance is only $1,701 because that's the amount that the Title IV funds credited to the student's account exceed allowable charges. If the Title IV credit balance is less than $1, you are not required to release the funds. It is the sole responsibility of the school to pay or make available any Title IV credit balance within the 14-day required time frame. The only exception to this requirement is if the school is on the advanced method of payment and the student or parent has signed an acceptable authorization for the school to retain the credit balance for the loan period, which we will discuss shortly. A school must pay a Title IV credit balance to a student or parent no later than 14 days after the balance occurs, if it occurs after the first day of classes in the payment period, or within 14 days after the first day of classes, if the Title IV credit balance occurs on or before the first day of classes for the payment period. In general, we expect that if you were releasing a credit balance to a student in a foreign country, it would be in the local currency. However, you can release it in US dollars if you choose to do so, or if the student requests that you do so. Schools are prohibited from charging students a fee for delivering Title IV funds. If a school delivers Title IV funds by crediting funds to a school-issued debit card, students cannot be charged a fee for making withdrawals of Title IV funds on the card. If students or parents are required to open a bank account, or if you open a bank account for the student or parent's consent is required. Students must not incur any cost in making cash withdrawals from a convenient bank branch or ATM. There are circumstances, such as a school on the advanced method of payment, where a student or parent may voluntarily authorize your institution to hold a credit balance. A school that is on the heightened cash monitoring or reimbursement method of payment may not retain Title IV credit balances. If you choose to retain Title IV credit balances and the student has completed a proper authorization, your institution must identify the funds held for each student or parent in a subsidiary ledger and always maintain cash at least equal to the amounts retained. You may retain interest on any earned on the retained funds. You must release any remaining Title IV credit balance by the end of the loan period. And you may not go beyond this end of the loan period deadline, even with student or parent authorization. Now we'll discuss the timing of disbursements, starting with early disbursements. The earliest a school can disperse Title IV funds is, for a term-based credit hour program, 10 calendar days before the first day of classes of the term. For a non-term credit hour and for all clock hour programs, the earliest possible disbursement is the later of 10 calendar days before the first day of classes for the period, or the date the student completed the previous payment period. This means that if your graduate programs are non-term for Title IV purposes, you cannot make the second disbursement of loan funds until the student successfully completes the first payment period. In other words, there can be no early disbursements for the second payment period in non-term programs. So if a disbursement isn't early, maybe it's late. For direct loan recipients, a late disbursement is a disbursement made after the student is no longer enrolled at least half-time. The loan must be originated prior to the date the student loses eligibility, and you may not originate a new loan or increase an existing loan amount if the student is not enrolled at least half-time. The proceeds must be used for educational expenses incurred while the student was enrolled and eligible, and it must be made no later than 180 days after the student became ineligible. If the student is eligible, you must offer the late disbursement and release the funds if timely authorized by the borrower. This means that if a student is still attending but less than half-time, if you want to disperse direct loan funds, the disbursement must meet the requirements for a late disbursement. This also means you cannot increase the loan amount for a student who is currently enrolled on a less than half-time basis to an amount that was greater than what it was when she was enrolled at least half-time. In order to make a late disbursement, these criteria must have been met. First-time, first-year borrowers must have completed at least 30 days of the program, unless the school is exempt from delayed disbursement requirements, or for a second and subsequent disbursement, the student graduated or completed the period for which the loan was intended. The department must have processed a SAR or ISER with an official expected family contribution before the student became ineligible, and you must have a valid SAR or ISER by the deadline established by the department in order to make the late disbursement. And again, you must have originated the loan prior to the student's withdrawal or dropping to less than half-time status. Only some late disbursements are post-withdrawal disbursement, but if things are operating smoothly, the primary reason for a late disbursement is a post-withdrawal disbursement. A post-withdrawal disbursement is a type of late disbursement when the eligible amount is determined by the R2T4 rules. If certain conditions are met, the school must offer the post-withdrawal disbursement. The school must provide written notification to the student or parent of their eligibility for the disbursements within 30 days of the date of determination of withdrawal, and you must receive confirmation from the student or parent prior to the disbursement. If the confirmation is received after the deadline, it is your choice as to whether or not you want to disperse, but if you are not going to disperse, you have to notify the borrower in writing of the outcome. And you must make the disbursement as soon as possible, but no later than 180 days after the date of determination. This is why you are required to perform the R2T4 calculation within 30 days of the date of determination of the student's withdrawal. It is because you must notify the borrower of her eligibility for a post-withdrawal disbursement within 30 days of the date of determination, and you can only do this if you perform the R2T4 calculation within 30 days. Now we're going to talk about the funding process. In other words, how does the money get into G5? On this slide, we're going to walk through the steps in the funding process to show you how the information you report to COD results in federal funds in your institution's bank account. So the first step is that you make or schedule actual disbursements to student accounts, and then you report those disbursements to COD. COD accepts the actual disbursements and raises the current funding level, or CFL, to the amount of accepted actual disbursements. COD sends the CFL amount to G5, and G5 then raises the authorization to match the current funding level. Schools request funds from G5 for transfer to the school's bank account, and then G5 sends that money to your federal funds account. Your institution transfers the funds from its federal account to its operating account, and then the school funds actual disbursements to student accounts. Now, this is not the only order in which some of these steps may occur. For example, you could disperse the funds to student accounts prior to receiving funds from the Treasury, and you must do this if you're on the heightened cash monitoring method of payment. So foreign schools operate on a records-first basis to establish or increase their current funding level, and the CFL and COD is referred to as the authorization in G5. You submit actual disbursement records to COD, and actual disbursement records are where the DRI is marked to true. COD sends data for the accepted actual disbursements to G5 to create or increase the authorization, and then G5 makes funds available in the amount of the increased authorization. Anticipated disbursements display in the action queue in COD, which is where you can change the disbursement release indicator from false to true. Once you make that change, the disbursement remains visible in COD until the next regularly scheduled pull of data by COD. COD pulls financial data, i.e. actual disbursements, twice a day, around 10 in the morning and 8 p.m. Eastern U.S. time, and then it transmits that funding data to G5 after it processes it. Once COD pulls the actual disbursement, it's no longer visible in the action queue. Once G5 accepts the disbursement data from COD, the direct loan funding process is initiated, and you will be able to draw funds from G5. In general, your current funding level should increase within about 24 hours after COD accepts the disbursements, and funds should be available to draw from G5 within 24 to 48 hours. This slide describes the situation when everything works smoothly. After requesting funds from G5, the timing of receipt of funds is based on the location of your bank account. Funds are deposited by the close of business in 2 business days after the date of request for a U.S. bank account and on the 3rd business day for a foreign bank account. If the funds are requested prior to 1 in the afternoon Eastern Time in the U.S., the day of the request is the 1st business day. If requested after 1 p.m., the next day is the 1st business day. In general, funds should be available in your account within 48 to 72 hours after you make a request for funds. Federal holidays in the U.S. or statutory holidays in your country may cause the delivery timeframes to be extended. Schools must not request funds that exceed their immediate need for those funds. Immediate need is defined as the cash you will disperse to students within 3 business days of receipt. Excess cash is any amount of Title IV funds not dispersed to students by the end of the 3rd business day after receipt. Direct loan funds are school and award year specific, but they are not student specific. So funds not dispersed to a student or returned from a student's institutional account may be dispersed to another eligible student within the regulatory timeframes. Of course, you must be sure to report downward adjustments to COD for the student not receiving funds or the funds that are being returned. If returned funds cannot be dispersed to another eligible student, they must be returned to the department. And fortunately, in this case, this action is called a refund in both G5 and COD. The department considers the school to have returned FSA funds when the school has deposited or transferred the funds into its federal funds account for disbursement to another student or initiated an electronic funds transfer to the department in US dollars. Remember, once funds are deposited into the school's federal funds account, the money must be returned to the department or dispersed to another eligible student within the 3 business day excess cash timeframe. If you have a U.S. bank account, you will use the G5 e-refunds process. The first time you do this, you must designate a U.S. bank account from which the funds will be returned, and this can be your normal federal funds account. For wire refunds from a foreign bank account, the G5 user goes to Payments, then Refunds, Creation. You will see a list of your direct loan awards, so you select the award to which you are refunding money, then a form is displayed. You will print out that form, take it to the bank, and instruct the bank on the amount to be refunded to G5. The form has all the information needed for your bank to wire the funds to G5. If the bank follows this process, a fee should not be assessed, but you will need to confirm this with your bank. Also, a little tip, if you're using Western Union for funding services, when they make refunds, please be sure they use the DUNS number and legal name of your school. If Western Union uses a different name, the refund may fail. And you'll see a link to the funding process overview, which is in the direct loan processing session on the website for foreign schools. And now we're going to wrap up with a brief look at direct loan reconciliation. Think of direct loan reconciliation as a triangle. What do the records in your financial aid office show has been dispersed to students? What do the records in the business office show? And what do the department's records show? To complete reconciliation, you will review the Title IV funds received from G5, the actual disbursement records accepted by COD, the school account statement from COD, and your internal accounting records that show the actual disbursements posted to student accounts. First, you start with internal reconciliation, which is described on a graphic on the next slide. This slide demonstrates how disbursement data between the business and financial aid offices should be reconciled prior to reconciling your institutional information with the department's information on the school account statement. Remember, you must reconcile at the student level, not just at the level of total net disbursements. Does the internal data for the net amount dispersed to each student match and reconcile? This slide is an overview of how the reconciled institutional data should be reconciled to the direct loan school account statement. Any discrepancies must be identified and resolved could simply mean recognizing timing issues. Reconciliation is complete when all discrepancies have been identified and resolved, and timing issues are tracked for reconciliation in next month's school account statement. You've documented your reconciliation, and the reasons for ending cash balance have been identified. Remember, resolution could simply be due to timing issues. You will not necessarily always be at a zero balance each month, and that's okay as long as you identify any discrepancies or differences. Now we're going to talk about program year closeout. You should start this process as soon as you make your final disbursements for the award year. There's no reason to wait until July. In many ways, program year closeout is basically one final month of regular reconciliation with one important difference. You must resolve any remaining ending cash balance, and you must be at a $0 ending balance. The program year closeout deadline is the last business day of July following the end of the award year. So the deadline for closing out the 1920 direct loan award year is July 31st, 2021. When you are finished, you will notify the department that you were closed out via COD. This slide has the regulatory citations for several of the topics that we have discussed today. I encourage you to review the regulations themselves and that your business office also do the same. It's important to read the actual regulations in addition to the information that's in the handbook. This slide shows the contact information for all of the school eligibility and oversight group school participation divisions, including the multi-regional and foreign schools participation division. This wraps up our presentation for today, and I'd like to say thank you for listening. I've really enjoyed this today. Thank you, and please do not hesitate to reach out if you have any questions about the content of this session.